All right. Back to work. Weekend is over. We got some money to make this week. End of the month this week. End of the third quarter this week. We are definitely going to see some fireworks as we finish up the third quarter. And boy, do we have a lot to talk about tonight on a very important video. Buyers finally found their way into this market here this afternoon. And there probably is space for the buyers to make some money tomorrow. So we definitely have some long trades we're tracking as the market bounces off that big move down that we saw last week. But you know what's going to happen, right? As we start climbing up the ladder here, we have to assume there are plenty of sellers who are waiting to short this thing right back down to retest the monthly lows here. So we definitely have some long trades for tomorrow. Got a small window for the buyers to work with tomorrow. Got some long trades, and we definitely have some big reversals back down to retest those lows. You know how we do it. I'm going to cover all my favorite trades in the video tonight. That you guys have a game plan to make some money on Tuesday. Now, before we jump in and get our hands dirty on these charts, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you appreciate these videos, if you enjoy these videos, do me a favor here tonight, as always. Hit that like button for me. Give me a shout out. Give me a holler down in the comment section below. Either way, thank you so much for tuning in, supporting the channel, and watching tonight. But enough of the intro. Let's get ready for Tuesday, right? End of the month this week, end of the third quarter. That usually means we got some fireworks to look forward to this week. Let's start off tonight on the 60-minute chart, the Nasdaq and the triple Qs, the Emini and the SPY here. Remember, I like to use 60-minute charts to help me plan my trades for the following day. Later on in the video tonight, I will drill down to some tick charts. Tick charts are best for the perfect entry timing. So we have a lot to cover in the video newsletter here this evening. What is going on right now on the 60-minute? Well, a couple things. First of all, bear market overall, right? Bear market overall. Big move down last week, right? We had those two big days, Thursday into Friday. We pretty much finished the week with a big move down. We have to assume right now, because of the size of that move down we saw last week, we have to assume that sellers are probably not too keen on selling very low right now. They're probably waiting for price to get a little bit higher so they can come in and sell nice and high. So I think right now, as we wait for those bears to re-enter the market above some of these prior swing highs right now, it definitely looks like these buyers have an opportunity, a very small window of opportunity. So I definitely think there's money to make on the way higher. And I certainly think we're looking for some shorts as we make our run back down to retest the low, possibly by the end of the month, end of the week here. So window is very small here right now for the buyers. We'll talk about some long trades and, of course, talk about how to pull this thing back and run this thing back down to retest those lows, because we have to assume the bears are waiting to sell the bounce here at this point. Now, before we jump into the tick charts and talk about favorite trades here for tomorrow, why don't we all check the calendar, all get on the same page here. There are two things you want to be aware of here for tomorrow. First thing, of course, is the consumer confidence number and that new home sales number. The home sales number will probably be the big number for tomorrow, but they'll both get lumped in at 10 o'clock Eastern time. Remember, you always want to pay attention whenever there's big red star news at 10 a.m. Eastern time during the week. We get a bunch of them here this week. So consumer confidence, new home sales tomorrow at 10 o'clock Eastern time. And then keep in mind, too, as we go later on in the week, end of the month, end of the quarter, we do expect volatility to kick up a little bit more as we go into Wednesday, Thursday, and Friday. So keep that news on your radar for tomorrow, 10 a.m. tomorrow morning. We'll definitely be watching that closely tomorrow in our trade room. And Wednesday, Thursday, and absolutely on Friday, we'll definitely expect an uptick in volatility as we finish up the month and finish up the third quarter of the year. Now, back to our charts, right? Because it's good to know when the news is tomorrow, but the money is made on the charts. Let's now dive in and go over my favorite trades here for tomorrow. I'll start tonight on the E-mini and the SPY, and we'll finish up here tonight on the Nasdaq and the triple Qs. As I mentioned in the introduction, we have a very obvious bear market right now, but the sheer size of that move we saw Wednesday, Thursday, into Friday last week, we have to assume that sellers are not going to want to sell too low. They're going to want to sell the bounce. They'll want to sell as we go higher here. And so I definitely think we have a small but important window of opportunity here for the buyers. And we certainly looking for some shorts as we make our way back down above prior swings off the top of that channel. So both sides of the market, I do believe, can make money on this here right now. I always love it whenever we see big moves, because big moves usually mean you can fade the bounce and short it back down again. Now let's look at the tick charts. Okay, tick charts are really important right now because it's a very big clue on this tick chart. Now remember, we use tick charts in our trade room because tick charts make everything easier, if you want my opinion. This is a 7,000 tick chart. You can see in the upper left-hand corner there. And if you're watching for the first time right now, that is the 21 EMA, one of my favorite indicators we use to find lots of winning trades each morning in our morning trade room. Now, there are two components that are going to help me put together my favorite trades here for tomorrow. First things first is that big move down last week. I mentioned the 60-minute chart. I've got that 43.99, basically call it 4,400. That's that big obvious swing high where we expect a lot of bears to be waiting for. That, in my eyes, is the window that we have to work with here at this point on the way higher. So buyers, again, we anticipate that bounce off that low to attract in more sellers and then start getting that run back down again. The second clue is a bullish range with a breakout. We have a bull market right now into a trading range, and of course you'll notice the buyers got in below and they're now rotating going higher. This is a very important clue, and when you put it in context with the overall bear market, it really makes it easy to find, I think, some winning trades here for tomorrow. Anytime I see a bullish market into a trading range, I basically look for a breakout pullback. I wait for a breakout, I wait for a pullback, and I look for a run going higher. That, of course, is what the bullish range tells me. Now, we have a very small window of opportunity right now for the buyers, but I do believe there's ways to make money on the move going higher. Then, as we start getting up into resistance, there's one specific type of entry pattern I will look for during that pullback. The big question will be, will we be able to hold that breakout pullback? I'm going to talk about how to know whether or not I should buy that breakout pullback or sell that breakout pullback, because that, in my eyes, that is where the rubber meets the road right there, because in all reality, with all those bears in the market, we take out some key areas, this may roll all the way back down, and I want to make sure you know whether or not we should be selling that breakout pullback back down to that low or buying it. So I definitely been talking about entry patterns there. And then one of my favorite trades here for tomorrow is a potential double top reversal back down again. So you could really think here there are on the way up, on the pullback, on the breakout pullback, and on that reversal. Later on in the video tonight, I'm going to talk about if we don't get any of these. I'll talk about if we V-top right off of this high. We'll talk about what to do down here. I'm going to cover that later on in the video as well, because these markets are wild into the end of the month and the end of the quarter. So we have a lot to discuss, because I want to make sure you guys know the game plan to make some money on these moves here for tomorrow. Now, as we go higher, my concern is I don't want to buy high, right? I don't want to buy high. You guys know this. If you're watching if you're taking my free classes right now, or you're with me in the trade room, whenever we are going higher and I don't want to buy high, the name of the game is a trap entry. Now remember, these trap entries are really simple. They're really simple. Strong run, higher high in price, nice strong signal, closing above the moving average. We talk about this a lot in the free trading course. So as we're making our way up into that 43.99, as we're fleshing out the rest of this very small window the buyers have to work with right now, I'm more about buying high. I want to look for a trap. In this case, it'd be a bear trap. Strong move, higher high in price, strong close above the moving average. That will be the entry I'm looking for as we go higher. Now, if we do end up getting into overhead resistance, I like the idea of the short back down again because we expect to see a lot of what? A lot of bears up there. What's the problem though? Momentum. There's a ton of bullish momentum if we find our way all the way into those highs. We do not stand in front of freight trains, at least I don't, in my trade room each morning. What I'd rather do is rather than trying to pick that top up there, I would rather wait and see if I can get some rookie traders to get fooled by this. This will be a very difficult place to be a buyer, right? You're buying way high in an overall bear market. This is oftentimes where bear traps are going to come in. Bull traps, excuse me. Let's see if we can rope in some buyers with what I call a crown reversal pattern. As we're pulling back, let those buyers try once. Go lower, let them try twice. I'm looking for what I call a crown reversal pattern. Now, if you're taking my free classes right now, this will rope together a failure pattern and a bull trap right above that high right there. I call these crown reversal patterns. And by the way, if you're watching this video for the first time right now, a lot of this stuff might make no sense to you at all, but that's okay. I teach all these setups, traps, failures, crown reversals. I teach all of these in our free trading classes. What I'll do is I'll put a link up there for you quickly, upper right-hand corner. Grab that link, take that free trading course, because first of all, the strategy I teach in that short video series will teach you a super simple trick we use every morning in our members trade room to know exactly where the best winning trades are going to be that day. That'll give you the roadmap. And then most importantly, in that video series, you'll learn my 4 favorite entry patterns to help kickstart you making money if you're missing the best trades each day, if it feels like you're constantly making it and giving it back and making it, giving it back. The roadmap I teach in that free trading course will get you on the right track, and you'll probably start making more money because of it the first day you take it. I'll put a link up there. Grab the link up there. Also, too, if you can't grab those links up there, I'll put all the important links down in the description of the YouTube video just in case you can't get that pop up right as we go higher. Take that free course. You can thank me later. That'll get you on the right track here. So as we're going higher, right, we're buying low. We're buying low with bear traps. As we find our way up in areas we think there are sellers waiting right now, we're not going to step in front of that freight train. We wait to trap in these buyers. Think about their stops, right? Think about those stops right now and that fuel back down again inside that free course I mentioned earlier. We talk a lot about trapping buyers in, using stops as fuel. Now, here's the big question, right? Here's the big question. As we pull back now, right? As we now pull back, this is going to be, in my eyes, one of the most important areas possibly of the whole week this week, because if the buyers hold it, if they hold that pullback, this little bounce here may turn into a pretty substantial short squeeze, Tuesday, Wednesday, Thursday, end of the month, right? We get a lot of support on the 60-minute chart right below us. At the same time, though, if it rolls over, right, that could be the dagger in the heart for the buyers, possibly for the rest of the week here. So how would you know it? How would you know when we pull back right now? Now remember, we have an overall bear market. So as we pull back, right, who do you think's coming in right there? Bears. I would imagine bears are going to come in. They'll connect these lows up around the high, find that channel, and they're going to want to short this thing right back down into that trading range. Now, I'm not opposed to that short, but I've seen way too many of these breakout pullbacks. Breakout pullbacks in a bull range like this are very, very common. They're very, very common. So what I'll be looking for here is I'll be waiting for the pullback. And if I start seeing bears, if they try once, if they try twice, you know what I mean? If I start seeing these bears struggle to run this thing back down, you know where they want to go, right? They want to go back and take out that big high. That'll be a pretty easy entry long at that point. But again, if you learn one thing on these videos, we do not pick tops and bottoms, right? We trap the buyers in and sell lower in stops, right? We trap the bears in. Think about those bears now getting short, right, to breakout pullback. Okay, breakout pullback off that trading range. Where do you think, right, where is their pain? Okay, my first mentor would always say, find their pain and trade into their pain for that retest of the high. This could be a very active morning tomorrow morning. Trap on the way up, right? Crown reversal off the high. And then again, it will be a 2-try failure pattern. In case you're taking my free classes right now, that'd be a 2-try failure. Let those bears come in. Let them commit. Let them try to take it lower. If they're successful, good for them. If they're not, though, bam, squeeze them, right, and go back up to retest the high. Now, one more thing here. Let's say we go up. We get our beautiful crown reversal, right, back down again. If you start to see this thing start to grind and grind and grind, that's the giveaway, okay? That's the giveaway, okay? We don't know enough at this point. Okay, if all it does is trap high and pull back, there's a very good chance we continue up to retest that high. Again, breakout pullback. However, if we make that move lower and we start grinding, and yeah, that's not a good look, right, for the buyers, right? That basically means the buyers are walking away here. And whenever you see markets grind like this, if you're a student of mine, we call these the pop and the grind, right? My favorite patterns in our trade room. Now watch closely. Draw a trend line off that low, okay? Bring it up around that high, and bingo. Look left, and you want that entry off the first test, off the high of that channel. Now, again, notice how I draw this. Off the lows, up around the high, draw those channels backwards, and then this could be any of the entry patterns. It could be a trap pattern like this one, right? Sometimes these things will pop up above the 21 EMA. The buyers will come in. They'll try to commit. Failure pattern, pullback pattern, right, back down again. And we assume at this point the bears have one thing on their mind, right? They're hunting for these big swings to run this thing back down again. So again, the most important takeaway is, again, if they pop down and grind down, we no longer look for that 1-2 back up again. We're now looking for the top of that channel, and we'll use any of the entry patterns you guys are learning in the free trading course to short the top of that channel and start looking to take out these big lows down below. All right, one more thing we'll talk about tonight, and then we'll go to the NASDAQ here, because again, I do want to talk about if we go lower here. I do think there's ways to buy down here as we go lower. I want to talk about that a bit more here as we go. So at this point, we've covered the move up. We've covered the pullback. We now know what to do with it when it pulls back, right? How to short it and when to buy it. Now, one of my favorite trades in a bullish environment in a longer term bear market. Right? Remember, it's a bullish short term right now, but a long term bear market. We have to think, right, as it goes higher, there are more bears waiting. Like I mentioned earlier, this breakout pullback is very common. This is very, very common. If I can get long on that breakout pullback, where do you think the target would be? Where's the target? Yeah, it's back to retest that high. Okay, the majority of the profit comes off at the retest of the high because, again, we assume more sellers are waiting up there. So is it safe to assume that professionals, that the smart money, the more experienced traders are buying that pullback? What do you think would happen up here? Who do you think's buying up there? Rookies, right? These are not professionals up here. Rookies make it a habit of chasing markets, right? They don't get in when they should. If we can get these rookies roped in and let them try a couple times, these are usually some of the easiest ways to make money. I call these double top reversals. In this case, it's a double top short, back down again. If I can get these bulls, again, these are rookies up here, right? We assume the professionals who bought that breakout pullback, they're taking their profit up here, right? The buyers become sellers at that high. So now as those buyers kind of walk themselves down the plank while they dig their own grave into that high right now, now we know exactly where their pain is. Now we know where we can use their stops. as fuel for the run back down. And this could be one of the easiest ways to make money tomorrow. Retest the high, rope in some of these rookies, use their stops, squeeze their stops, and run this thing right back to where? Basically back down to retest that low. And because you have an overall bear market, you leave a runner down to take out some prior swings underneath. That could be one of the best trades of the week here, is that double top. And also, too, a lot of times what happens is, a lot of times this thing will dump and you'll get one of those trap patterns, a trap set up as it rolls off that high. Just make sure you get that trap, right? Again, two-try failure because it's so bullish, right? Trap the buyers in twice, use their stops as fuel, and then as it rolls over, remember I said earlier that trap on the way up? Same pattern now on the way down, right? It's a strong move, it's a lower low in price, and it's that trap, all right, above that high. That's a bull trap. And remember too, right? If it was to roll and start grinding, you know this, right? Trend line, channel, right, and then back up off of that high. All right, guys. The only other variable would be, right, if it runs lower, which we'll cover next, or if we keep on blasting, right? If it keeps on blasting, we'll still look for that crown reversal, but we may have to be a little more patient and want to here for tomorrow. All right, got a pretty good game plan here on the S&P. Let's now go to the Nasdaq. It's almost the same idea on the NQ. Let's grab the NQ here. We know we're bearish. We know we had those big moves down in the wake of the FOMC, and we assume there probably aren't that many bears who want to sell down here. They probably want to sell nice and high. I would imagine there's a lot of bears that are waiting above that 15,027 and half area. I would imagine a lot of bears are waiting up there. So as we look at the tick chart here now, same idea, right? Same idea. It's a bull market into a trading range. We have this we call rotation off the low. They rotate off the low. We talk a lot about this in our free trading classes. And now the market runs higher. Again, we anticipate a breakout, pullback, and a go, right? So the exact same game plan we talked about on the S&P. It's bull traps on the way up. It's that crown reversal on the way down. We wait and see what happens on the pullback, right? If we start seeing the bears get trapped in, we buy for a retest of that high. If they roll over and grind, we look to short that first pullback. We also talk about too, right? If they do end up pulling back and retesting, great place to trap in some of those rookies, right? Great place to trap in rookies up there. Let them commit, right? And sell right into the stops with that two-try failure to stop run and back down to take out these lows. So again, I'm not going to waste your time by covering the whole entire game plan. You can pretty much kind of copy the whole thing off the S&P. Now, what if we don't get that run higher? Right? What if the market simply takes off and runs back down again? Well, I still think we have chance here for the buyers. So if we do end up pulling back right now and we still get those bears to come in and get trapped a couple times here, I do still think, again, we know where the market probably wants to go here right now. So if we don't keep going higher and then pulling back, if we just pull back into the low of the channel or into the high of that trading range, I do still like the idea, again, carefully, of course, getting underneath the moving average, trap those bears in once and twice. Now, why twice? Why do we have to be so conservative on the entry? 2 tries because it's a bear market. It's not a bull market right now. If it was a bull market, I would say, oh, this is easy. Trap the bears in and buy into their stops. That'd be an easy failure, right? Failure into pullback combination. But again, we're not a bull market, right? So in these situations, we're more patient. Let those bears try twice. That way we know we have all the bears are committed and we can use their stops to fuel this move. Because again, in this case, we're going against that long-term momentum. Now, that same pattern idea, if we end up running lower, here right now, it shouldn't surprise anybody that buyers are probably waiting to buy nice and low. Remember our biggest kind of context, right? Context is such an important part of trading. You could have the exact same pattern setups, but different context will give you different results. We have to remember right now, if we go lower before we go higher here, there simply aren't going to be a lot of sellers unless something dramatic happens overnight, which is possible. But, all things equal right now, if we don't go higher here, it's going to be difficult to attract in more sellers. So if we end up rolling lower right now, who do you think is selling down here? We assume rookies. These are not professionals. Professional sellers are waiting above the highs, right? This is where pros get short. Okay, only rookies would chase it and run lower. Now, we're still overall bearish, so you got to be careful. I can't pick the bottom, right? I'm not going to put a buy order right there and simply buy it blindly, but I will look for those bears to come in, let them try a couple times, and look for what I call a failure into pullback combination. In this case, though, it would be a failure into trap combination. So basically, we trap the bears in, let them try twice. We have one right there. Right? We go up, we pull back underneath the moving average. The bears try once, they go higher, they try twice. That same look to a pattern. Remember, higher highs in price, right? Bears want to sell high. So again, if I can get the bears coming in, let them try a couple times, trap them in around key support below that range. And again, it's a bear market, but it's quite an overextended bear market right now. That elastic band has been pulled all the way back for the bears right now. So get those bears trying twice, run those stops for that squeeze going higher. And like I mentioned earlier, as we go higher, there's really one pattern I'm looking for as we go higher. Because again, I don't want to buy high. I want to buy as low as I can. That trap pattern will be the key here as we go higher, right? So again, if all we get is that V top off the high, we start plunging and taking out these lows here, there is a good chance here they're trying to run this thing back down to retest the low as we get into support. And it could be here, it could be here. It doesn't matter where I am. But as we pull back below that moving average, trap those bears in, squeeze those stops. And as we make our run higher, remember, strong run, higher high in price, and that trap below that low. Again, in the video course, I call this a failure into pullback combination. We oftentimes see pullback combinations. In this particular example, it's a failure into a trap. I do think traps are going to be the easiest way to make money as we try to make our way back up to retest the high. And again, this could even be, even if it rolls way over and takes that low out, remember, not a lot of bears down here. So again, trap them in, 2 tries, use their stops to fuel that reversal going higher. And then as it makes that run higher, don't chase it. In a bear market, trying to be a buyer in a bear market, the one rule you cannot break is do not buy high, right? So traps are the name of the game as we do it. All right, I'm excited. Game plan is ready for tomorrow. I think the buyers have a lot of great setups if they can time it correctly here for tomorrow. The big question will be, how will that breakout pullback look? Okay, that breakout pullback tomorrow could be a big milestone for the rest of the week here, big turning point for the rest of the week here. Now into the game plan for tomorrow. Now, tomorrow morning, 8 o'clock Eastern time, we're going to get together and trade this stuff together tomorrow. The best place to learn this, the best place to trade along with us is every morning in our morning trade room, 8 o'clock Eastern time, every morning. I'll put all the important links, by the way, all the trade room membership links, the free trading class links. I'll put them all in the description of the YouTube video. I would definitely recommend start with that free video course first. Learn the basic strategy. Start making money with it on your own, and soon be ready, warmed up to trade with us every day in the morning trade room with all the members at 8 o'clock Eastern time. If you got any questions, any concerns, any trouble getting access to anything we talked about tonight on the video, please don't be afraid to call the office or use live chat. If you have questions, you need help, we're only a phone call or a live chat away. Megan and I are always here to help out if you need us. All right, guys, great job tonight. Thank you so much for tuning in. Thank you for watching all the way to the end. Now get out of here. Enjoy your evening. Get some rest. I will hopefully see you tomorrow morning. We'll trade this game plan together in the morning trade room. If not, same time, same place, back here tomorrow. As always, thanks for watching. Be well. Be nice to each other out there tomorrow. And you better be here next time. Adios, amigos. Bye for now.